Good morning from Australia, 10:30 a.m. here. Hopefully you're safe and well and keeping warm all around the world. Welcome everybody to my updated end of June 2021 gold video. And it's going to be an interesting one because I haven't done one since February this year. We've broken out of an uptrend, or have we? So let's look at it. Really good to just look at some updated fundamentals and also look at the technicals together. All right, now let's just think about it for once. The fear of inflation. The fear of inflation is seeing gold rally up again off the bottoms at 1680, 1700. The fear of inflation. Okay, US Fed is going to sit behind and wait for interest rates to rise. For inflation to rise before they even consider raising interest rates in this uncertainty at the moment. All right, so let's look at the facts. Okay, the truth is what the chart says. Okay, it doesn't matter whether we're right or wrong, the chart's always right. So the price at the moment is coming back 1870s. Will it drop below 1850 and keep dropping? Wait and see. Silver, it's in the same thing. Okay, up we went on the fear of inflation. We've just gone sideways for the last 12 months in a tight triangle. Okay, you might be able to see gold's triangle as well. Maybe not in this trend on this chart, but you will see it when we go back to my other websites. All right, actually I've got my own trading chart here from last time. Those of you that have been following it, let's just quickly go to the weekly chart. You know the results. Okay, this is the wonderful chart that I keep sharing everyone. There's only slight adjustments ever made once every 6 to 12 months. That's correct. Slight adjustments are made every 6 to 12 months on your weekly charts. Expert traders. I mean, I watch the big floor traders when I was a broker, and they would print their weekly and monthly charts off, and they would update for 6 to 12 months, hand-drawn. They would hand-draw the bar charts on their weekly and monthly charts. Why? Because it's deadly more accurate. Once you get the angle of time and price right, and you can see the angles right and measurements, time and price is so accurate. Okay, so look at this chart. Okay, your gold trend was where I thought we'd come back to, but we didn't. Okay, it was a little touch early. Those of you that have watched the February video will easily be able to see that that green circle was always put there. In fact, those of you that have never seen my videos, just go be aware of them. They're here. You can go to YouTube and just Google my name and you'll find. Okay, they're there. From about 29 minutes onwards, you see all the historical charts. We need to see what I predicted, why gold was going to go where it was. All the way to $1,400. July is a typical time to bottom. My last big prediction in 2010 prediction. You would have seen this if you watched the last. That 3 months sideways. Last prediction in 2012, bottom 2019. Here. Always good to watch. July last year, the video was. True. The prediction was to come down. All right, I'll turn that off so it doesn't get confusing. But that's the key. Keep looking at it. That's what I said. There it is. See, that was my latest prediction from February. Don't buy it yet. Wait for it to come down. We'll call them for 16. Okay. Very simple. Okay. That was the prediction at the top from July last year. There weren't many people saying that was a top in gold in July last year. Okay. They were expecting it to go to 5,000. I said no. Wait for it to pull back, and then up we go. Okay. So we're here. We are. We're at that zone. We are so close to this green zone of buy. It's just a matter of fine-tuning it and trying to work out exactly where. So while we're still on the weekly chart, I just want to show you what I call noise. Okay, I'll make the chart as large as I can over the last 12 months. All right, now we can see some certain things that we need to look at. I'll use my special rectangle tool. And what I'm going to do is I'm just going to go off the top of the candle wicks to the bottom of where the candle closed. That is my top in gold, little pink square. Yep, drag it, and lo and behold, there's that same amount of noise again to perfection. Okay, look at it down here on the bottoms. There's that same amount of noise again to absolute perfection. Okay, come over here, there's that same amount of noise to perfection. Okay, this one here was slightly a little bit bigger, was it? No, there's that noise again to perfection. Okay, so if you're trading gold, you need to know that what that pink square is. That pink square is so critical, because right now we need to know that pink square, that noise. So we're in the noise zone. Okay, we're still allowed to be in this pink zone to say that we're coming back for a deep kiss goodbye. It tricks everyone to go greedy short here, when in actual fact it's just a big clean out. Okay, I accumulate and I accumulate, and I buy millions and millions of dollars worth of gold. And up the top, all I have to do is sell a quick 100,000 of gold, and it starts an avalanche. All of a sudden, all the weak hands panic and sell millions of gold to me, and I'm buying them millions of gold again. So be aware of that, how the markets work. The institutions love tricking the masses. Okay, but we do need to get some type of kiss goodbye here and wait for the seasons to tell us what to do. Alright, so just remember, the seasons, well, gold charts are a great place to go to get the wallpapers. Okay, you can do gold and silver wallpapers there. We're in a consolidation for silver as well. Okay, so wait for the consolidation to end. When will it end? We don't know, but check this out. 3, 2, 1 gold. Okay, we can go to seasonal charts for the gold, and that's the general cycle. 40-year seasonal cycle for gold. Okay, bottoms in end of July in the black. Last 15 years, it's been the red line. Okay, so either way, last 15 or last 40, end of July. Okay, we can go to the actual website, 321 Gold, and just go to that and look at the website. Okay, 321 Gold. You come to the main page, landing page, and down here, charts. You've got a 40-year gold chart. That's where we go to get that chart. Then we've also got a 40-year silver chart. Silver's a little bit more nervous and definitely takes stops a little bit longer, so it's end of August, okay, that it bottoms. So just be aware, sometimes gold's leading the way, sometimes silver's leading the way. It's either going to be a bottom in end of July or end of August for the precious metals. There was a time there I said precious metals wouldn't bottom in July. The precious metals would bottom in end of August, and I was right. I think I got it on the video there somewhere. Let's have a look through here very carefully. Those of you that have seen it, you know exactly what I'm talking about. I've been predicting these perfect cycles, 2010 cycle, and it came true deadly accurate. 2011, 2012, top on the third wave was perfect. The cycles, bottoming out, peaking from bottom to bottom and tops, they're there using all our special cycle tools. There it is, July. That was the end of July, and I said it won't bottom. It's going to be at least end of August before the cycle hits. And there it is. End of August, it bottomed. Up we go. And it's just bottomed and bottomed ever since. It's been going up and up ever since. We said that it'd be a good buy around end of Christmas 31, Christmas 2019, and it was. Okay, right as we predicted, 2019 was a perfect buy. So the cycle do work. My top was pretty good in July last year. It was an inverted position. Gold was in an inverted position. You obviously know what that means, yeah? Instead of it being at a cycle bottom, it was a cycle top. But the seasons still said something big was going to happen in July, and it did. I predicted it would top, and it came down to our green zone, okay? It's really important. So remember, Charts R Us are a really good website to get them really nice, pretty wallpapers. 321, you can go there and get your charts, long-term seasonal charts, okay? Really good. All right, a nice quick video. We'll spend a couple of minutes now just looking at the measurements and see where we're going. You know, there's a lot of talk that gold is definitely going to bottom. Well, if it is going to bottom, then what's this here? Left hand, big head. We're in the right shoulder here now, forming what? Noise. There's a little right shoulder there. So, you know, just be conservative. Don't go off the tops of the noise, just go off the candle bodies. Okay, and we can always allow for a little bit more for it. But get that pink square now, project it up. Okay, that's the minimum for gold, guys, by the end of 2021. Okay, we'll be back a bit more higher. Okay, 2,100. There you go, 2,115, something like that. Right, now that's if this is a left shoulder and this is a head, right shoulder. Okay, so we're forming a right shoulder here. It's possible. If not, we're going to come down to my lower red circle here and finally back into the green. Okay, so either way, is it going to be a bottom formation here, or will it be a double bottom? Okay, a large double bottom. We don't have to be guessing the market. You wait for the market to produce a pattern that is reliable, and then you project and measure that pattern and then trade the winning momentum for as long as the trends and the momentum hold. That's it. Okay, so as a weekly chart trader, you're licking your lips thinking it's time to buy very soon. Okay, as a scalper, you don't even look at the weekly chart other than know that where you are on at the end of the week candle close fights. Okay, identify where the candle close fights are, where you can see. And what I mean by the candle close fights are, it's pretty simple. You can see, like I said before, the noise, but that's the candle close fights right there. Okay, so that little pink line is where the candle close fights were. Okay, right on the old high from 2011. All right, don't worry about that. That was just all the noise getting above and tricking everyone that we're going to a new high. Take stops. All right, come down to the 4-hour chart. Let's see what the 4-hour chart says to us. Okay, we've gone and done the top formation. It's pretty crystal clear that the top formation was a top formation. It rolled over very easy on the 4-hour. I warned everyone that there would be a bit of a head and shoulders formation, and there was a head and shoulders formation through here. Okay, it wasn't very perfect, but it was still good enough to be a head and shoulders formation. And did we project downwards to the target? Well, yes, we sure have. Okay, we've gone down even lower. Okay, so there's no way that you're going to get much more profit going short in gold here around the 1750s, 1760s. You're best to just stay focused and wait for the bottom to be made and confirmed around 1720, 1740, 1750, or even here at 1770, and buy on the next strength. Okay, buy on the next wave out. Okay, I love buying gold. I don't like going short on gold. I'll go long US dollar, Japanese yen. All right, so you can follow me on the commodities trading pages if you want. I'm on Facebook on the commodity trading page. I do all my gold updates here. Okay, you can see that we did a chart on Friday talking about where the candle closes, all about where the weekly candle closes. Okay, don't worry about the noise spikes. I keep telling you, it's all about where the candle closes, and we close right on the noise. Okay, right on the trend. So it's going to be interesting. This week will be a great weekly candle to watch. Will we close below, the 1770 and confirm that we're going down lower to like 1680 again? Or will we make a tight range and in 2 weeks' time get a nice big momentum candle? And that will be a perfect kiss goodbye. These are the weekly moving averages. Okay, the weekly moving averages are helpful in maintaining the long-term trend. Who needs trend lines when you've got a magic moving average? If you want to learn more about these magic MAVs, you can just go in and type in the Guppy's GMA. Guppy GMMA tool. You should get shitloads of information on it, okay? Read up on it, how to trade with it. Even baby pips talk about it a bit. But you need to know. You need to keep sharpening it. Just like an axe. You're swinging it, it's going to get blunt. Okay, the Guppy's moving average will work differently on more volatile pairs to less volatile pairs. So you need to adjust the indicator and learn how to adjust it. Learn how to sharpen it. And that'll take some time. Okay, but practice it. Guppy's multiple moving average. Well worth your time to investigate into it. So where are we? Wait for the momentum. Don't try and catch a falling knife. We're in the noise zone here on the weekly. Don't panic. Okay, if you're a long-term buyer of gold, hold on to it. If somehow you bought gold at 1900 and you can still survive if it comes down to 1680, 1690, hold on to it then. But if you're in big losses in your long in gold and you're seeing it falling and falling, Warren Buffett has 2 golden rules. 1, always preserve your capital. And 2, never forget rule number 1. preserve your capital, because it's what's going to be needed to get back into the trade again when it finally does turn. We don't know when it's going to turn, so just protect your long if you're short-term scalping. Wait for it to turn back long again and then re-enter. It's easy to re-enter in once the momentum's changed. At the moment, short-term momentum is to the downside. There is no momentum on the 4-hour chart saying buy me yet. All right, nothing there yet. So that's a pretty good update, guys. It's only a short little 15-minute one. If you need to get a hold of me, you can message me on Facebook. You can even message me on the YouTube channel. Hopefully I'll get around to answering you. I'm not a hard person to get a hold of. But, I'm not world famous again anymore. I don't need to be, on the computer and getting 1 million followers and advertising my YouTube channels. I'd like to keep semi-retired. So thank you very much for your time. Look forward to being able to assist you again. And let's just see how we go. We're going to either see a dip to 1680, 1700, 1720 is where you really would get greedy. Or just be patient, wait for the kiss goodbye next week, and buy on strength back above 1800. Once the weekly chart has confirmed we've kissed goodbye effectively. All right, take care everyone, and I'll see you at the next update.